Welcome everyone to Vested Interests. Hope you're having a great day. This is Shane back again to cover a topic I've been looking into for a while now and wanted to cover with you guys. I've been wanting to add a little bit more diversification in foreign stocks, specifically in the emerging market space. I've already added some individual stocks to my dividend portfolio. Vale, a mining company out of South America. Glaxo Smith Klein is a European pharmaceutical company. Enbridge is a gas and oil supply company out of Canada. Looking at some Canadian banks as well, Bank of Nova Scotia. However, I'd like to dip into the Asian markets, emerging markets over there, but I am a bit concerned with the recent buildup and friction between China and America and some of the issues surrounding like China and Taiwan. So I thought if I'm going to look at the emerging market space, I might look at some ETFs, especially those that pay out dividends. Now, in my recent video about 13Fs, I stumbled on several ETFs that meet the emerging market criteria, so I thought I'd cover some of those and walk through what I'm looking at and considering adding to the portfolio. So here's what I'm going to look at: IEMG, VWO, FXI, EEM, and DVYE, and I'm also going to look at VOO, which isn't an emerging market ETF, but it is the S&P 500 Vanguard ETF, so it'll give us an idea of what those emerging markets look like compared to the current American market. I also want to look at the expense ratios of these ETFs, so I know what I'm paying in management fees. I'll look at how they're performing over a year, 5 years, 3 years, 10 years. If they have a 10-year, I'll look at their expense ratios. We'll look at some of their holdings, how the ETFs are broken out, how they're broken down, how they allocate their sectors, where are they investing their money, if we can see that. And we'll just get a quick overview of each one of these so you guys can take a look at it. And let's just get right to it, guys. So first off, let's look at IEMG. As you can see here, it's currently $60.23 per share. It's down 1.5%. Year to date, it's down 2.35%. It has an expense ratio of 0.11. Let's go down and look at. So if you look over here, you'll see hypothetical growth. If you were to have invested 10,000, around 2013, it looks like, you'd be right here just above 14,000. So you can kind of see right here where total return at 1 year 19.9, 3 years 8, 5 years 9.6. It hasn't been around for 10 years, so you don't see a 10% yet. And since inception, it's about 4.94%. Benchmark is 5, so it's a little bit behind what they're trying to hit for benchmarks. Not terribly so. Let's continue to look here. Let's see what else we've got here. Exchange, class equity. Here we go. This is a little more information I'd like to know. PE ratio of 18.51. If you can see that there. It has a price to book ratio of 2, which is pretty good. I'd like to see what it actually looks like. It has a triple B rating, so investment grade rating. I'd like to see the fees. Show that up here maybe. Yeah, expense ratio is 0.11, so there's your fees. And I'd like to see, there it is again, 0.11 is your fees. And here are some of the holdings. You've got the Taiwan Semiconductor Manufacturer, that's information technology. Tencent Holdings, communications, Samsung Electronics, information technology, Alibaba Group, consumer discretionary. Not sure how to pronounce that. Meituan, consumer discretionary, Reliance Industries, energy, info systems. Infosys Ltd, information technology, China Construction Bank, is a financials, housing development, finance corporation, financials. So there's some of its holdings. Actually, there's 277 pages of holdings, so quite a few holdings. It looks like it's pretty diversified. Does it show us? Yeah, right there. Here's another one I'd like to look at. Exposure. So the exposure within the fund breaks down 21.67% in information, 18.33 in financials, 13.56 in consumer discretionary, 10% in communications, 8.93 in materials, 6.2 in industrials, consumer staples 5.7, energy 5.1, healthcare 4.9, real estate 2.5, utilities 2.43, cash and or derivatives 0.3%, so real low cash. And then you could look at some fact sheets, the prospectus, annual reports if you looked this particular ETF up and wanted to do some more research. But that gives you at least an idea of what the breakdown is. Again, some of its top holdings here, and then a pretty low fee, 0.11%. So that is IEMG. That's an emerging market ETF. Next, let's look at VWO, Vanguard ETF. And then what's it say as far as what is Vanguard ETF? Invest in stocks of companies localized in emerging markets around the world, such as China, Brazil, Taiwan, and South Africa. Goal is to closely track the return of the FTSE Emerging Markets All Cap China A Inclusion Index. Has high potential for growth, but also high risk. Share value may swing up and down more than of stock funds that invest in developed countries, including the United States. Only appropriate for long-term goals. Okay, so you can see there the expense ratio is 0.10. Again, it's an international global stock, diversified emerging markets. Let's keep going. Hypothetical 10,000. If you had invested 10,000 here around 2011, you'd currently be sitting on about 16,060 in returns, and it has come down a little bit recently. All right, since inception, 6.899 return. Spliced emerging markets is 6.99, so just under spliced emerging markets. As you can see here, its portfolio composition is 99.50 emerging markets, 0.4 Europe, 0.10 is other. It has $110.9 billion worth of total assets, 5,250 stocks in its portfolio. Again, very large portfolio, a lot of positions in this stock, and the current 10 largest positions make up 21.3%, and you can see right here, Taiwan Semiconductor, I think we just read that name, Tencent Holdings, Alibaba, again, we're seeing some of the same names, Meituan, Reliance Industries, Infosystems, I think that was on the last one as well, Housing Development Finance Corp, China Construction Bank, that was on the last one as well, Gazprom, Serb Bank of Russia, okay, that's the first one we've seen of a Russia holding in its top 10. What else do we have here? Let's look at price and performance, see what's in there. Again, last price was $49.37. Looks like it's currently $49.18. That must be the aftermarket. 52-week high, 56.26. 52-week low, 48.76. So definitely closer to that 52-week low. What else? Again, here's the performance. If you'd have thrown in 10,000 in 2011, today you would have around 16,060 right in there. Again, you're seeing the since inception, 1 year is 5.83% return, 3 years 10.26, 5 years 9.07, and this one does have a 10-year, so it's been around for a little longer, 4.79%. Looks like a 6.66% return total since inception. And here's some more information. Return before taxes, 6.84. So that is one of the things you need to consider whenever you're considering this. There will be some different taxes with this being a foreign or predominantly foreign holdings. Portfolio management. Let's see if there's any other information. Here you'll see the price to earnings ratio is 13.3. The price to book is 2.2. Both pretty good numbers there. Earnings growth rate is 11.5%. That's a pretty good return. Foreign holdings, 98.9%. Turnover rate, 4.1%. Not a huge turnover rate, but does have some. And again, you'll see the 10 holdings, Taiwan Semiconductor, Tencent Holdings. I won't read those again, but you can look at them. And then here is a good one to look at. Here is the market allocation as of 10/31, so as of October 31st, 2021. 36.9% of the portfolio is in China, 18.2% in Taiwan, 15.2% in India. I believe you're looking at between China and India, two of the fastest growing markets in the world. I think Taiwan's up there as well, but definitely China and India I know are. Brazil, 4.8% of the portfolio, 3.7% in South Africa, Saudi Arabia, 3.6%. Saudi Arabia is another one that's growing pretty fast. Russia, 3.5%, Thailand, 2.5%. So this one definitely, Mexico, Malaysia, Indonesia, United Arab Emirates. And then these are all below 1%. Philippines, Qatar, Kuwait, Chile, Turkey, Greece, Colombia, Hungary, the Czech Republic, Egypt, Bahrain, others, 0.1%, and Pakistan. So there's even more rows. We look at those in Romania. So there's only one other row, Romania. Again, 1%, pretty small. But your top five, let's say China, Taiwan, India, Brazil, and South Africa. 6 is Saudi Arabia, 7 Russia. So if you're looking to get some exposure, that gives you pretty good exposure to a bunch of different markets. But definitely a large portion of this one is in China, Taiwan, and India, the three largest, 36.9%. For China, Taiwan 18.2%, and India 15.2%. But pretty good diversification there. I think we saw the fees, but let's look at that. 0.10% for the fees, so pretty low. Fees on 10,000 invested over 10 years, so you'd pay $236 on fees. That's not terrible. Next up, let's look at FXI. This one is actually a large cap ETF, China's large cap ETF, so it's not really emerging markets, it's more based out of China specifically. So you'll see here the 52-week low, 37.44, 54.78 is the high. At 37.44, it is right at the 52-week low. China's market is down right now, so it may be a good time to look at these. That's part of the reason I'm looking at it right now. It's down 2.78%, 19.93% for the year as of December 3rd, 2021. Does have a little higher expense ratio at 0.74%. Let's look at here. So again, if you look at your hypothetical growth, if you'd have put 10,000 in, there you go, 10,000 in January 2006, you'd have had 31,858 as of November 24th. Can I get right to the end? Let me see if I can get to December. There, December 3rd. 29,000. So almost 3 times your money since 2006. Right? So not terrible returns. Since inception, 210. 10-year, 55.93, big percent there. Year to date, down 16.7%. Right now it's down. But you are seeing a 5-year return 17.4, 3-year -3, 1-year -4. So over the long run, this has been a pretty good performing stock again. China had some significant gains over the last 20, 30 years, almost 40 years really. Let's see what else. Let's see if we can see what's in the fund itself. The PE ratio, I'm sure that's in here. Yeah, there we go. Portfolio characteristics, PE ratio 13.55. The price to book ratio is 1.71. That's a pretty good. That's lower than the other at 2.0. At IEMG was 2.0, I believe. Let's see if we can see what's in the portfolio actually. Business involvement. Controversial weapons, nuclear weapons, civilian firearms, tobacco, global combat, or compact, thermal, oil sands. Fees, like I said, was 0.74%, definitely higher than the last one. Here we go. Here are the top 10 holdings. It looks like Tencent Holdings, Meituan, Alibaba again. We're seeing that Alibaba pop up. Tencent Holdings, China Construction Bank was on the other one. JD.com, Industrial and Commercial Bank of China, I think that is. And again, there are 6 more, 1 to 10 of 58, so there are definitely more to look at if you want to look at the rest of their holdings. What else they show today? There we go. Shows the breakdown per sector. Consumer discretionary, 32.23%. So this is a little different from the last one we saw with it was more in the information technology was their big holdings for IEMG. So again, you could look at consumer discretionary, 32.23%, financials at 27.22%, communication 18.74%, Information technology is 5.3, healthcare 5, real estate 3.2, energy 3%, consumer staples 2.4%, materials 1.6, industrials 1.0, cash and derivatives 0.05. So really, your IEM was more focused on information technology, whereas this is specifically focused 32% on consumer discretionary. All right, and I actually really like the consumer discretionary sector. Or not the consumer staple sector, which is only 2.4% here. Consumer discretionary there, 32.23. But I believe that would be because of the, let's see, I think Alibaba is Alibaba there, 6.95%. No, that's discretionary, I believe. Yeah, consumer discretionary. I don't want consumer discretionary. So there's your big consumer discretionary holdings, as well as JD.com. If we looked at what those three companies were about, that would be a big portion of this portfolio. Next, and that is again, let's go back up. FXI, China large cap ETF, 37.44, 52-week low at 37.44, so right at the 52-week low. Expense ratio 0.74. So not terrible expense ratio, but it is higher than the others that we looked at so far. The next up on the list is EEM. It's another emerging markets ETF. 52-week low of 48.77, 52-week high of 58.14, currently at $48.94. It is also down 1.72%. Year-to-date 5.13, so that was the day change, and the year-to-date change is minus 5.13%. Expense ratio similar to the last one at 0.70, not terrible, not as good as some out there. But again, here, if you want to look at your 10-year, if you'd have put in 10,000 here in 2004, today you would have 60,000, so about a six times return, 6 times your money over that period from 2004 to 2020, 16 years. Or 2021, sorry. Yeah. December 3rd, 2021. So 16, 17 years, you have a 6 times your money. That's a pretty good return. 10-year 5.46 shows that here, and since inception 10.38, the first year 16.8, 3 years 7.7, 5 year 8.48. Again, this is another one for long-term investors. You're looking for something in the emerging market space. Let's see here, PE ratio of 18.98 has a price-to-book ratio of 2.07. Again, neither of those numbers really scream overvalue. It's actually compared to our current market here in the United States, that's pretty good. Fees, like I said, were 0.70. Let's see if there we go. Here's some of the holdings. Taiwan Semiconductor, I think we saw that. Tencent Holdings, Samsung Electronics, Alibaba. So again, some of the same. China Construction Bank, Housing Development Finance. So some of the same companies. Let's see if we can see the... There we go, the exposure breakdowns. Again, this one has a real big exposure to information technology. Financials, number 2. Consumer discretionary, 13.7. Communication, 10.73. Materials, 8.42. Consumer staples, 5.74. Energy, 5.51. Industrials, 4.97. Healthcare, 4.42. Utilities, 2.27. Real estate, 1.97. Cash and/or derivatives, 1.0. What we got that's hiding? Other is nothing, so it doesn't even show up. Again, you can look at the fact sheet. Prospectus, summary, prospectus, annual report, if you wanted to do more research on this. And this is, again, EEM, another emerging markets ETF. Next up, let's look at DVYE, also an emerging markets dividend ETF. So this one, all these pay a dividend, by the way. But this one specifically focuses on the dividends. Its 52-week low is $35.92. Its high is $41.39. Day percentage change 0.3%. This is up 0.38% up. Year to date, it's up 7.97%. Expense ratio 0.49, that's not terrible. Actually lower than the last couple at 0.7. So, and then here we go. If we look at the chart again, $10,000 investment in early 2012. Today would be worth $11,281. So not a huge return on this one actually. Let's look at, yep. So if you're looking at that, again, your 1 year, big return on your first year. Your 3 years, 6.57, your 5 years, 7.89, and since inception is 1.80. This does have a higher dividend yield, so this may be one you're just looking at for cash flow. For a high dividend yielding stock that's not going to grow much, but you want the dividend return. And their market they were looking for. So they have beat their, or right after benchmark, 1.92 was their benchmark. Let's look down and see. All right, PE ratio is 8.40. That's actually extremely low. Price to book ratio 1. That's a real good price to book ratio. Anything around 1 is real good. I think we saw the down percentage. 0.49% fee, and then again here's some of the holding: Global Trans Investments, GDPR, China Power International Development. These are some Total Access Communications, CTEP, Johansen Coal Mining, so there's some coal mining in there. Let's look at what their exposure is. So their highest rating is weighting is 15.87 for financials, 15.15 in energy, 13.41 in utilities, 11.70 in materials, real estate 9%, industrials 8.9, communication 8.3, information technology 7.37, consumer staples 5.35, consumer discretionary 4.60, cash in or derivatives 0.19, no others. So that one is more towards your financial. So if you went with something like a blend of IEMG, FXI, and DVYE here, you would actually have a pretty good blend information. So your IEMG was heavy on information, FXI was consumer discretionary, and DVYE is in financials. They're all weighted differently, so that's why you want to look at these, just because it's emerging markets doesn't necessarily mean they're weighted the same or investing in the same. Some of these were very similar. This one definitely stands out as different from the rest. And then last, just to give you an idea of one that a lot of people like here stateside, this would be similar to VWO, right? So this was not VWO. Similar to FXI, their large cap ETF, China large cap ETF. This would be similar to your VU. This is the S&P 500, so the 500 largest companies in America. So this expense ratio is 0.03%, really low, lower than any of the ones that we've seen so far. Its market price is pretty high, $421.69 per share. It is up 4.88%. American market is overvalued by most people's estimations today. If you'd bought in 2011 at 10,000, today you would have around 44, so about 44,573%. So about 4 times your initial investment. So since inception, it's about 15.48%, 16.59 over the 10-year, 16.86. So about 15% return on the S&P 500, the VOO ETF here. Let's look at what else we can see here. So if you'll see right here, portfolio composition, communication services, sits at 10.8%, consumer discretionary 12.8%. See, here's another high-end consumer discretionary. Consumer staples 5.6%, 2.9% in energy, 11.4% in financials, high in financials too here, 13% in healthcare, 8% in industrials, 28% in information, real high in information technology. Materials 2.5%, real estate 2.6%, and utilities 2.4%. Here are the 10 largest holdings. Microsoft Corp, number 1, Apple number 2, Alphabet, which is Google, number 3, Amazon number 4, Tesla 5, The Meta platforms, which is formerly Facebook. Number 6, Nvidia Corp. Number 7, Berkshire Hathaway. Number that's 20, Berkshire Hathaway. Number 8, JP Morgan Chase, and United Health Group, a bank and another investment firm. They're investing in the VU. So the VU is, so Vanguard is investing in Berkshire. So if that tells you anything, that would maybe one you want to look at too. I know Berkshire is pretty expensive though. So really, guys, those are what I'm currently looking at. Now, so let's look at just a quick snapshot. Ticker, PE, price to book, expense ratio, payout, and cost, just to wrap this up. The IEMG had a PE of 18.5, price to book of 2, expense ratio of 0.11%. It does pay out a dividend semi-annually, and it costs $60.23 currently. The VWO, PE 13.3, price to book 2.2, expense ratio of 0.10, does pay out quarterly, cost currently $49.18. FXI was a PE of 13.55, price to book of 1.7, expense ratio of 0.74, pays out semi-annually, cost is $37.44. Ticker EEM, 18.98 PE, price to book 2.07, expense ratio 0.70, pays out semi-annually, cost currently $48.94. DVYE was a PE of 8.4, price to book of 1.05, expense ratio of 0.49, pays out quarterly, current cost $37.90, and if you're looking for the VU, 24.9 PE, price to book of 4.6, extremely high price to book, expense ratio of 0.03%, pays out quarterly, and it's $421.69 per. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. Well, guys, if you've stuck with me this far, if you could give me a thumbs up, ring the notification bell, subscribe to the channel. We don't want you missing out on any future videos posted. And what do you guys think about these emerging market ETFs? Do you currently or are you considering investing in the emerging market sector? What are you looking at, if anything? Are you investing in any ETFs, even if they're not in the emerging market sector? If so, which ones? Drop a comment in the comment section below and let me know what you guys think. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time. Thanks for stopping by, guys. Appreciate it.